welcome to the first of Open Banking Expo Canada's quarterly meetups. Thank you for joining us for an agenda packed with networking opportunities, discussion, and plenty of thought-provoking content. This is a chance for the open banking community of Canada, including disruptors, innovators, and visionaries, to come together to exchange ideas and experiences as we work towards a future vision for open banking. Thank you to EY Canada for partnering with us to bring you the first 3 meetings. For now, the free-to-attend meetups will be virtual, but we do hope that we can hold these in person at a later date. Looking ahead at what's to come, we have the audience collision, which is not as dangerous as it sounds, I promise. This live virtual conversation is an opportunity to engage and share ideas with fellow attendees. We'll be considering, should we be waiting for the rules to be written, or can the industry lead the adoption and experimentation of facilitating open banking? Finally, using the virtual platform, we encourage you to submit questions and comment on the sessions in real time. On to the first session of the meetup, and we're delighted to welcome Don Cardinal, Managing Director of Financial Data Exchange, or FDX, a not-for-profit organisation with the aim of unifying the financial industry around a common, interoperable and royalty-free standard, the FDX API. During this fireside chat, Don will be discussing what's on the horizon for open banking in Canada. And given that FDX is leading the charge on a common API standard, he'll also be revealing its plans to engage the market in the coming months and years. He'll also address the challenges specific to the Canadian market and the potential for a market-led initiative to work hand in hand with regulation. So let's join that session now. Thank you so much for joining us today, Don.
Thanks for having me.
Now, I've introduced Financial Data Exchange there, and obviously many people in Canada and of course the US will be familiar with you. But for those who might not fully understand what FDX is doing, can you give us sort of your best 60-second description of FDX's mission and who your members are?
Sure, happy to. Well, FDX is a member-driven international nonprofit technical standards body operating in the US and Canada. We're dedicated to unifying the financial industry around a common, interoperable, royalty-free standard for the secure and permission sharing of consumer and financial data using the FDX API. Our members, well, they're as diverse as open finance. We have Fintechs, banks, brokers, credit bureaus, credit unions, trade associations, service firms, and consumer advocacy groups. There are over 190 members on 4 continents. And I wanted to point out 2/3 of which are not banks. Our March survey, we had about 16 million consumers using it, making almost 1 billion API calls.
That's great to hear. And obviously today we're talking all about Canada. And I wondered, is FDX's standard setting in competition with the Canadian government's sort of own open banking consultation?
Absolutely not. We're a technical standards body. We're simply building the rails for people to communicate. Policy, we're barred by charter from commenting on policy. We're barred by charter from lobbying. We're just a tech standards body. So we're designed to work under any regulatory regime, whether it be something as restrictive as you see in Australia or the EU, or something as laissez-faire as the United States. But again, we simply we'll leave it to the lawmakers to decide the policy outcomes and the whats. We're on the engineering side to really do the hows and actually fulfill those wishes.
Now we've seen, lots of varying approaches around the world to open banking. So can you explain whether FDX is proposing a kind of market-led alternative to open banking regulations, or do you believe that, regulation and market-led standards can coexist?
Well, as we said earlier, FDX is designed to work under any regulatory regime because, again, our members do business in multiple jurisdictions. So we'll leave it to the lawmakers to set up what the rules of the game are and what policy outcomes they want. As a technical standards body, we felt it was really useful to let the engineering and the technical solutions be done by the parties who are closest to the customer, who depend on the customers for their very existence. And so we think it's a right strikes the right balance between solving the technical solutions and being nimble and responsive to customer needs and really the ever evolving cybersecurity threat matrix versus the actual policy outcomes.
So, for those who don't know, FDX was founded in the US in 2018. And then, Don, you launched the FDX Canada working group just last summer. So, how is FDX ensuring that the standard is fit for purpose in Canada and, of course, accommodates all the kind of unique Canadian market and provincial needs that you have over there?
Sure, several fold. At the high level, a third of our membership is Canadian. But we also have two board seats on FDX that are guaranteed for Canadian firms, a bank and a non-bank. In addition, the Canadian Work Group, as you mentioned, stood up. They also have a technical task force, and their job is to put the FDX spec really up on the rack and go field by field and understand what changes need to happen and what should be done to improve it to make it better and more fit for purpose, both at the federal and provincial level. Examples are, you know what, postal code should be alphanumeric, not just numeric as it is in the States. It's RISP in Canada versus 401k in the United States. So as we go through those 600 fields, we have a very diverse and balanced group of Canadian firms going item by item, discussing, well, we should do this, we should do that, and then requesting changes to the main FDX spec so that it indeed is fit for purpose. Oh, and also
Now,
we're hiring a Canadian director as well. I'm sorry, I forgot to mention that. We actually have some Canadian on the ground who's there local, who really can interface with all the members.
and have they been hired already? Are they in place?
Not yet. We're in the midst of interviewing. So please, if you any candidates out there, if you'll hit us on LinkedIn, our job rec is posted. We would love to hear from you. The more candidates, the better.
Absolutely. I'm sure you'll get some great applicants. And, on the surface, a common API standard makes a lot of sense, of course, but how does FDX actually arrive at consensus standards, given that you have such a diverse membership?
Oh, good question. Again, we have best idea wins. So every firm gets the same vote, whether it's Don and Ellie in a fintech in a garage startup, or your RBC or Scotia. And that does tend to work, but the idea is we have to move forward by consensus. So we have a layer of governance that works at the task force level, the working group level, and as items go up to be approved, to make sure voices are heard no matter your size. Best idea wins, and we enforce that strictly. And then we also have balance in the working groups between banks and non-banks. We found that that level of balance is useful for making sure everyone's voice does get heard. But that being said, it's unique once we finally do have consensus on an item, then we can when we report out a ratifying item, we can say, look, this is an industry term. This is an industry consensus from the word go, and we don't have to put an asterisk next to it when we talk to regulators or press or lawmakers. So that's the reward at the end is, again, that type of consensus, being able to put that behind whatever we publish.
Yeah. And can you tell us, are there any particular recent updates to the FDX API and the standards that you can tell us about here?
Sure, we just ratified the spring version 4.6 that includes bill pay. I think in the UK you might notice a standing order or standing pay order. We included
Yes. Yeah.
work for end-to-end encryption for field level encryption. We also have a use case for credit management and servicing. We also included card rewards. Those are, as people start traveling and staying more, those will become more and more important. But we also added additional fields for investments, annuities, life and disability accounts. FDX is more than just checking and credit cards. We have fields for investment accounts, retirement, pension, mortgages, auto loans. It's the totality of open finance. And I think that's a key thing that's often missed when other jurisdictions talk about FDX. It's anything that's being scraped today is what's in scope. And of course, it's not just the spec as well. We've also have a lot of artifacts to support our members. Simple taxonomy of terms and user experience design guidelines as firms go to build these things and touch customers to make sure that best in class ideas are made available to even the smallest firms. So that's quite a big package we delivered in the spring, but again, it's what our members wanted us to do.
Yeah, great to hear that you've had a recent update. Any indication of when the next one is coming? How often do you sort of review those?
We do those twice a year. We do a spring and a fall that coincide with our summits. Our summits are free for our members to attend, and it's a great chance to hopefully next year when they are in person to get together and have conversations about solving problems, jointly working on things together. Best done with beverage in hand, I might add. But it's a great way for the community to get together. It's a nice family to have, and so we do try to match that spring and fall. Our next summit is virtual. It's October 12th through 14th.
Great. Well, we'll look forward to that, and as you say, hopefully things return to being in person next year. Now, I was just wondering, what are some of, the more unique challenges to the work that you're doing in Canada as compared to the US?
There are a few differences, but I think the biggest learning we've had is two great people separated by a common language. The business culture is just a little different. The way things are approached, the way meetings are structured, is a little different. And so we've had to adapt to that, and it's part of the reason why we're eagerly awaiting having our Canadian director on board. That being said, I think there's still a lot of commonality between the two markets. We want to solve problems. We want to serve customers. Very similar legal and banking structures. We do have a bit difference in America. We have almost 14,000 financial institutions and endpoints. Regional banks, credit unions, brokerage, and that sort of thing. It's a little bit fewer endpoints in Canada. So to that extent, it's in some ways a little easier. But again, part of it, I think, is just really having this collaborative environment. In the States, it's culturally, I think we've been able to throw people into a room and say, go solve a problem, and they'll just start working on it. I think in Canada, we've learned that there's some warm up needed, some introductions needed. I think, again, that was really just a learning we had. And that was really on our part. We should have known to be a little more, I think, culturally aware. So I think that was a big change.
Yeah, it's interesting to hear about the differences there, but of course, people often lump together the US and Canada as if, the markets are the same, but there's obviously some, as you pointed out, unique differences there. So, more specifically then, how is FDX engaging with, I guess, the smaller players in a financial services ecosystem that has traditionally in Canada been dominated by a handful of large banks?
I think the first thing to do is to have a big tent that's inclusive. You want as many
Mhm.
voices in. As the good book says, as steel sharpens steel, one person sharpens another. So too do open specs get better by having more and more eyes and more diverse viewpoints on them. So we actively recruited smaller firms, and we're still looking for newer firms. But part of it is lowering barriers to entry. We have differing dues structure based on the size of the firm. So a large financial institution will pay a lot more in dues than a small fintech. That's a best practice
Mhm.
from standards bodies around the world, but it also allows startups and firms represented by women and BIPOC leaders who don't have a ton of funding often times to participate. And remember, we said one firm, one vote, best idea wins. So we really do enforce that. And we want to make sure that's there. And then two, we always have split leadership at every level between an FI and a non-FI. So those things all help, but we also know that there aren't a lot of time in the day for smaller firms to participate. So we also have groups like trade associations like the Large Credit Union Coalition, the CCUA, and others involved in consumer groups to try to spread the gospel, if you will, amongst their members who can't necessarily afford a resource to come. In addition,
Mm.
we also try to make the information available to our members as they need it, whether we have periodic pull-ups, we do digests, we do newsletters, so that you don't have to attend every meeting. I think that's one of the big fears is, well, hey, I'm a small fintech or I'm a local credit union. I have 3 people in my tech department. They can't go to a dozen meetings. And so we try to in every way we can, get FDX information and what's new and get it to you in the way that best suits you and to try to right size your FDX experience. I think that's one of the things that we've put in culturally with FDX. We're all servant leaders. I think about half my team are involved in Scouts at one point, and I think that's really carried through to make sure our members are served no matter the size, that their voice is listened to, that what they say matters, and that we take action on it.
Mhm.
So and it's a never-ending process. It's kind of like working on your house. You're never really ever done. And so we're always tuning that, trying to get better, and we encourage smaller members to do so. I hope that was a long answer, but it's so vitally important that we get voices outside the majors as well into this ecosystem, because unless you get the data recipients as well as the data providers on the same page, you'll never see true adoption.
Yeah, absolutely. And it sounds like that approach is based on sort of being flexible and inclusive. Am I right there?
Absolutely. Absolutely.
So uh, let's move on a little bit. I mean, obviously 2020, we've all had experienced the COVID-19 pandemic, and hopefully now we are starting to come out of the other side of that, albeit slowly. Um, But I wanted to ask, what are the main benefits to fintechs of engaging with FDX as they look to emerge from the pandemic and hopefully grow into the market?
Sure. What we've seen, the COVID has been a forcing function, if you will. We've had, if you think about digital adoption or the adoption curve, you have early adopters, fast followers, mainline, and then resistors, folks who are hesitant to get involved with this digital thing, people who are reluctant to do digital check deposits and that sort of thing, mobile banking. But COVID was really a forcing function with that. And so by getting people's feet into the waters, if you will, and getting consumers and in the marketplace, in the digital space, the demand for digital fintech apps also goes up. So that rising tide lifts all boats. So they have a much larger customer base to pick from, potential or prospects. Now, with respect to FTX, remember it's a common and interoperable royalty-free standard. It costs nothing to use our spec. You don't even have to join to use FTX. You can simply come register, promise not to patent our spec, and then we'll give you a license to use it at any volume you want commercially. We're not for profit, for God's sake. We're not trying to get rich. We're just trying to make everybody safer and more secure, as well as get data in the hands of the people that need it. So what we're going to see is, one, larger populations as a result of COVID who are digitally savvy now and who have needs that are going to be unique. As people has changed their behaviors, you're going to see new digital offerings in the app space, and those needs are going to be benefited and augmented by free flowing consumer data, financial data from a variety of accounts and relationships, and so that's going to enrich and offer them more choices. Now with FDX, of course, the spec itself is free, and I'm not aware of any firm monetizing that access. So again, free data, I think, is going to be really important to help a lot of fintechs. And I'm really looking forward to the new things that haven't been invented yet. I'm going to go a little old school. When I first connected up my modem to my Commodore 64 computer back in the 80s, no one could have foreseen the World Wide Web. But the idea of standards for two devices to talk to each other securely and routinely, repeatably, so that you could plug in one device into another and just expect it to work, led to this entire, new multi-trillion dollar global digital economy. So too, advances like FDX will allow a lot of things yet to come that we haven't envisioned. No one would have thought when people started sharing data that you could use your credit, you could use your bill payment history, paying your utilities, paying your rates on time to boost your credit score. And yet we see with Experian Boost and Ultra FICO just that happening. In the U.S., we have some underbanked and unbanked folks. We call them thin file or no file. They simply don't have any credit history of any remark at their credit bureaus, but they pay their rent, they pay their rates, they pay on time. These typically divorced spouses, military, recent immigrants, or other people who are really have been excluded from the financial markets who are just getting in. Yet they had this rich payment history showing really good stewardship of their funds, and the ability for a bureau to look at that and make cash flow based decisions. You go, you know what, you are credit. And that allows firms that, or rather individuals who didn't have access to credit, or if they were subprime, to access prime credit, which again is a lot cheaper, a lot more favorable terms, and again it makes their scarce resources go further. So again, there's some new things coming, and I'm really looking forward to see what the market comes up with now that we're laying down these secure and common rails.
And are there some kind of unique opportunities then in the Canadian market that give common API standards a boost, do you think?
I think there are. I think there's some unique needs. One, the geography's sort of concentrated, if you will, and I think that does help. The more people talk together and realize, I've got this, you've got that. how can we bring that together, I think is interesting. I think with the DIAC, the Canadian IDs framework and the Payments Canada network and the other payment schemes that are standing up on a national level, I think those are very complementary. And I think those in combination with the FDX data standard, I think will be very, very useful. And I think you're ahead of the US in a lot of ways. I mean, we do not have in the States anything like DIAC, nor do we have anything on the horizon. So I think in a lot of ways you're ahead. And it always troubles me when I see press saying, oh, the Canadians are behind on things. And not necessarily. I think they're doing some really leading things. And I think with FDX as a common standard incorporated with that, I think to expect great things and really innovative things that are going to be fit for purpose and unique both at the federal and provincial level going forward.
Mhm. Finally, I'm going to ask you to do a bit of crystal ball gazing, which I know everyone always loves to do. But what do you see on the horizon for open banking and open finance in Canada?
Well, I mean, we mentioned earlier, our charter bars us from commenting on policy or commenting on legislation or lobbying, but we do know the demand is there. The consumer demand for sharing their data. The fintech apps are there. Customers are using them, downloading them. So we know that'll continue to grow. And we talked about COVID being a forcing function, increasing the number of prospective users of those apps. So as long as there's a market need, there's going to be a need for technology to fulfill that. To the extent that FDX, who's got a heavy Canadian membership and a heavy Canadian presence, can fulfill that, I think it's going to be useful. Again, we're going to lay down the rails. We're going to make sure they're fit for purpose at the federal and provincial level. And really, I want the market to surprise us on what they do with it. We're really looking forward to that. And we welcome anything that the Canadian government wants to put forward. Again, we've designed the spec to work under any size regulatory regime, under either a light touch, heavy touch, or something in between. And they've been very open as far as letting us come in and talk about what we're doing, looking over our artifacts. And I think they've been very open-minded and very inquisitive about what we do. And we look forward to continued engagement with them. So that's, I think, basically it. More of the same, but faster and more unique and more competitive, and rightfully so, because I think that it benefits the consumer at the end of the day.
Hmm. And do you think the government is going to move quickly? And also, do you expect kind of widespread adoption of FDX in Canada?
Well, like I said, I'll leave that to the government speed to the people who follow that on a professional basis. I'm a technologist at heart, so I'd be out of my element. Like I said, I hope we build the best spec so that more people are on it than not, simply because it is indeed, we earn that place. It's really up to the market to decide, what spec is good or not. Just like Bluetooth and USB had to earn their spot in the marketplace as a common standard, very much FDX needs to earn that spot and continue to make sure it stays relevant, or another spec will come along and replace it. And I think that's a good thing. I think that market discipline makes sure that we always serve our members and their customers. Best idea wins.
Great. Well, yeah, absolutely. And look, Don, thank you so much for joining us today. It's been a pleasure to speak to you.
Thanks for having me.
Thanks again to Don, and we look forward to seeing the role that FDX plays in open banking implementation here in Canada. Now, on to our next panel session, which brings together all corners of the Canadian ecosystem on the future of open banking in the region, how Bill C11 can play its part, and the future of fintech regulation. Don't forget to send in your questions for the panelists via the Swapcard platform, which you should see on the right-hand side of your screen. This session is moderated by industry open banking advocate Michelle Bayo of Open Banking Initiative Canada. Over to you, Michelle.
Thank you so much, Ellie. Welcome everyone to Open Banking Expo Meetup. I'm your host, Michelle Bayo, CEO and founder of Finnovator, as well as an OBIC board member. I'm really excited for today's panel discussion on future-proofing your open banking strategy. We will be highlighting some of the challenges regarding the pace of consumer-directed finance in Canada, the opportunity for the whole ecosystem, as well as insights and steps on how you can get ready for open banking. As an example, the UK, through a combination of market action as well as government legislation, has become the leader in open banking as they launched in January 2018, and by using payment initiation service providers, has allowed the UK consumer to automate many reoccurring transactions in their daily life while gaining and maintaining high security, privacy over their personal information. In terms of adoption, in March of 2021, marked 3 million users of open banking in the UK with over 303 registered providers. And from an open banking API volume perspective, they have gone from 66.8 million in 2018 to nearly 6 billion API calls in 2020. I'm excited for today's discussion on how we help Canada move forward, and would like to start by introducing our distinguished panelists. First, we have Abhishek Siha, who is a partner at EY. We have Ben Harrison, who is the head of partnerships and policy at Portage Ventures. We have Hannah Zaidi, who is the director of regulatory R&D at Wealthsimple. We have Hugh McKee, who's the head of BMO Partnerships. We have Derek Smith, who is the Vice President of Operations and Optimization at Uni Financial Cooperation. I'm really excited for today's discussion, and I would actually like to start off by letting each of our panelists introduce themselves and tell us a little bit about their role as well as their organization. Abhishek, can we start with you?
Yeah, thanks, Michelle. This is Abhishek Sinha. I'm a partner at EY based out of Toronto, and I lead our banking technology practice. And as a part of that, I sort of lead our open banking efforts across the country. I've been associated with consumer-directed finance or open banking, whichever term you want to use, for the past few years. First, working with some of our UK clients and the UK practice as things got underway there. And of late, we've been helping a number of our Canadian clients with their open banking strategy and approach and activities in the market.
Wonderful. Thank you so much, Abhishek. Happy to have you here. Ben, over to you.
Yes, thank you, Michelle. So at Portage, which just so everyone knows is an early stage fintech investor, I have two main functions. One is around partnerships. So that means helping to connect our investors to our portfolio companies and creating commercial partnership opportunities there. The other responsibility I have is around policy. And so I've been involved with the open banking payments modernizations discussions for years now. And from the beginning, I work closely with a number of our portfolio companies who are also advocating for these topics. And I am a board member of Fintechs of Canada, which is another association trying to push the fintech agenda.
Thank you so much, Ben, for all the work that you're doing as well. Hannah, over to you.
Thanks, Michelle. So I am Director of Regulatory R&D at Wealthsimple, which essentially means that my core function is to help us launch new products in the market. And so far, it's been our Challenger Bank offering, our crypto platform, our P2P product, and more. And so in working at dealing with regulatory strategy and launching new and novel products in the Canadian market, one of the biggest sort of frictions is around things like access, open banking, payment modernization pieces. So spend a lot of time on advocacy there. And with that, I'm also a board member at Open Banking Initiative Canada with Michelle.
Yeah, really excited to have you here for this discussion. Hugh, over to you.
Thanks, Michelle. My name is Hugh McKee. I head what's called BMO Partners, which is the part of the organization that's focused on how BMO works with fintechs, with big techs, with industry consortia and incubators and accelerators. And a core part of that, obviously, is the work around open banking, and I'm the lead at BMO on that front as well.
Really happy to have a bank as part of the discussion today. Thank you, Hugh. Over to you, Derek.
Good day, everyone. My name is Derek Smith, and I'm the Vice President of Operations and Optimization here at Uni, or Uni Financial Cooperation. Uni is a federally regulated credit union here in Canada. My experience in the financial industry spans over 19 years. My current role at Uni, I'm responsible for technology evolution and all back office process evolution that serves our retail and commercial banking practices. So we're continuously looking at how to better serve our clients now and in the future. So open banking is very important to us.
Wonderful. Thank you, Derek. I am really excited to get started with these questions, as I'm sure many of you are as well. And as we jump in, the first question is, how should Canadian financial services ecosystem respond to the recent developments surrounding open banking missing from the latest budget? Abhishek, over to you.
Thanks, Michelle. We need to understand in the past few months, COVID has really dominated the agenda for all levels of the government. And that really, if you look at the focus of the FY 21-22 budget, it's really around, how do we recover from the setbacks associated with COVID. But despite this, many in the industry actually expected consumer-directed finance to be a lot more directly addressed in the budget, given the expected economic benefits and opportunities for innovation that benefit both the consumers and the service providers together. There are, however, some important pieces of legislation that have been introduced of late that lay out what can be described as the scaffolding to enable consumer-directed finance. One of them is the Retail Payments Oversight Framework, the RPOF, and it creates, in simple terms, a public registry of regulated payment service providers. Now, this will help ensure that providers comply with financial and operational requirements, as well as starts fostering trust in the Canadian Paytechs, PSPs, whatever you want to call them. The current implementation of Canada's upcoming RTR real-time rails system requires that these payment service providers use the biggest banks or the large banks or direct clearers to access this real-time payments infrastructure. And regulating these PSPs sort of lays the groundwork for opening up direct access at some point in the future. The second sort of important piece of scaffolding is Bill C-11, which updates our existing privacy framework so that consumers have more control over the data that they share with businesses. And C-11 is also a step in the right direction when we think about the transition to consumer-directed finance. We've seen that participants in the current financial ecosystem are already taking initiatives to diversify their value proposition, develop new business models like banking as a service. And these are similar models that we've seen emerge in countries that are further along in the consumer-directed finance journey, like the UK. We have businesses across the financial services sector, including banks, insurance, and credit unions that have established partnerships like Verify.me on the identity verification issue. We've seen some leading fintechs diversify their traditional offerings to include crypto and savings accounts and create their own new payment methods. We're seeing neobanks partner with Canadian credit unions to launch new savings account products that offer higher rates and no fees. And the point of saying all of this is that we do see businesses making accelerated investments in new ideas here in Canada. Nonetheless, the industry needs to keep pushing forward and taking necessary steps to introduce new models into the Canadian ecosystem. Looking forward, there is more to be done, but I think it'll take another degree of collaboration and trust to move that agenda forward. All participants seem to be on the same page that consumer-directed finance is a valuable step forward that will benefit all parties. The question remains more of the how and the when rather than the if, in our view.
Thank you, Abhishek. Great insights to many of the audience who need background on what's happening. So thank you for that. Ben, can you add to that as well?
Sure. I mean, I think how you respond depends on where you sit in the ecosystem. From a fintech perspective, I would say the general sentiments were disappointment, but not surprise. I think this has unfortunately been a file, while presenting a number of benefits, not just if we think about it from a financial services standpoint, but more broadly from a digital economy standpoint. We have just seen limited to no interest in actively pushing forward. And I think the implications of that are industry-led initiatives will continue, and it'll be harder to pull those back if we ultimately put in place a regulatory framework. And that's going to create a whole bunch of additional friction that will just take time to work through. And fortunately, time is not something I believe we have a great deal of on this file. I think it means fintechs continue to be left in the dark, wondering what their business plan and roadmap needs to look like over the next 12 to 24 months, because they don't know if we'll have open banking, if we won't have it, will data be shared, will it not be shared? And unfortunately, uncertainty is not a great thing for any business, but it can be a death knell for a young company trying to find their way in this marketplace. So a lot of the foundational pieces that Abhishek talked about, while encouraging on paper to see, we continue to have a lack of action. C11 is not actually going to be passed in this sitting of Parliament. And I know we'll get into the RPOF, which is now known as the RPAA, the Retail Payments Activities Act. I think there's a whole bunch of challenges with that if, again, left unaddressed, we risk creating unnecessary government oversight without appropriate responsibilities and duties for fintechs to really continue but grow the impact that they're able to have on consumers and Canadians.
Yeah, I think there's been definitely from the market, you have seen many comments around that. So I think it's great to see and hear from what the fintech's point of view is. Hannah, can you add to that from being at Wealthsimple as a fintech?
Yeah, no, really excellent points, both from Abhishek and Ben, and setting the stage on what we're at. I think the few things that I would add in the context that Abhishek provided from a fintech perspective is, if we look at the Canadian context, there's a couple ingredients that I think are missing and I think are going to be challenging to fill in the foreseeable future from a regulatory and competitive landscape that exists in other markets like the US and the UK, and make it more conducive for fintechs to essentially thrive and get to more mature business models. And really part of it is, if you look at the Canadian context, you have the big six. 93% of total assets are concentrated in the big six, versus like in the US, there's 44% asset concentration in the big four. It's a really stark difference. And that trickles down to a couple other factors. If you look at partner banks that fintechs work with, there's really only like one or two in Canada at the moment. There are other evolving ideas and players that are in extremely early stages around like banking as a service platforms, but it's still really just one or two players, and that adds a lot of challenges to a fruitful fintech ecosystem, where really all your competition is going to one or two players. Your offerings are then the same, and you're really having to there's a lot of challenges around being able to compete around economics and really like the offering and the user experience. And so I think from a competitive landscape, that's a key piece that I think is missing and difficult to solve for. We don't have regional banks or smaller, financial institutions that are trying to compete for deposits, for example, than you see in other markets that then create this really conducive ecosystem for fintechs that are really just looking to become partners for fintechs and act as the pipes and the infrastructure. I think being able to see more of that in Canada is really important. So that's from a competitive standpoint. I think what Ben mentioned more broadly around some of the regulatory change or lack thereof around open banking, it not being mentioned in the budget, and really nothing substantial. We haven't seen the advisory report. We actually have no idea what the recommendations on what end of the spectrum we're going to land on, whether it's market-led, whether it's government mandated, or something in between. For example, from a fintech perspective, I have no guidance that I could give to our engineering and product teams around, okay, this is what payment modernization is going to look like. These are the things that we have to implement in the next 12 to 24 months. Or, similarly, when it comes to like data sharing and API access on open banking, there's like, other than a lot of great things on paper, there's nothing tangible that I can actually grasp onto and make any changes to our business.
Yeah, and I thank you for that. I think that's really great insight. It makes it really difficult for fintechs and even credit unions as they're innovating and growing. Derek, what's your thoughts in regards to the budget and open banking?
Well, I think I'll come back to one of Abhishek's points where he said it's not a matter of when it's going to happen. Sorry, it is a matter of when it's going to happen. It's not a matter of whether it's going to happen, right? So what it's going to look like, it's important to a lot of people, especially the fintechs out there that, like Hannah just mentioned, that are waiting to see what do we have to do, right? What are our next steps in our world to make sure that we can come and accommodate the open banking infrastructure and what that looks like going forward in Canada. So that is the big challenging point for fintechs. It's also a challenging point for credit unions and the banks in Canada, because we want to make sure we're ready and we're moving in the right direction, and we're pointing our tech teams in that direction also to make sure that when things become available, or when we need to make things available for our clients, to be able to use some new technology offerings from fintechs, that because they see value in it, that they'll be able to connect to our credit union in the future to be able to do open banking. So in whatever shape and form that is going to take. I'm not surprised that it's not there, because I do agree with the fact that there's been so much focus on COVID that some things have been put on the back burner, and are just taking more time. There's also the fact that in Canada, things tend to take more time than in other parts of the world, and so I'm not overly surprised from that perspective also.
Thank you for that perspective, Derek. And Hugh, I would love to have your thoughts as a bank, and knowing that you're working on partnerships, therefore probably talking to a lot of fintechs. What are your thoughts in regards to the budget and the lack of allocation specifically to drive forward with open banking?
Yeah, it's a good question. I mean, I take it for what it is. I think don't see this as a signal that says this is not a priority for the government. I just think on a relative basis, this is probably not an enormous priority for them right now. And I think, like, all of us are effectively inside the game. We may think that this is the most important thing, but for most Canadians and small businesses, this is actually not that important on a relative basis. They're more concerned with their economic viability and ongoing. So I think that's the read that I take out of, why is it not part of that? I also take comfort in the fact that I feel like we actually have made progress. So we've gone through a successful negotiation. We've provided perspectives. We've identified some common ground. I look at my job, like every single day I'm negotiating data access agreements. And it's a little bit like it's not like we have to wait for the teacher to tell us what to do. So I feel like there's things we can do. We can continue to move this thing ahead, and we don't have to kind of wait for the answer coming from the federal government.
Yeah, and I think that leads us really into our next question. Many corners of the industry, as we were just discussing, have been urging the government to press forward with open banking, whilst also criticizing that we're at a glacial pace in comparison to a lot of the globe, with Brazil and Mexico, Australia, New Zealand, obviously the UK and Singapore moving forward so quickly and for many years, many of them, I think calling it a glacier pace is it fair? And what needs to happen to change that? And maybe we could start with Hannah.
Yeah, a couple thoughts actually, and I would actually challenge the perspective that I do completely agree with you that this is not a priority for the Canadian government right now. I think, though, that if we were to look at it from the perspective of how this could accelerate economic recovery, how it could actually bring in other groups of segments of the population that might be credit invisible, for example, or underbanked or unbanked. I think that like pointing to specific use cases or I should say scenarios in which open banking could help with that is important. So for example, there's specific segments of consumers, especially right now in, recovering or still in the midst of the pandemic, whether it's businesses or individuals that are struggling with access to credit, young adults, recent immigrants, even older consumers who have stopped using credit products. Democratizing access to cash flow based underwriting, for example, that could be done in contrast to like credit bureau underwriting. This is something that we've seen in jurisdictions that have utilized, other forms of data through open banking to be able to do that. I think we do need to sort of emphasize the piece that this is not just fintechs and the financial services industry that's sort of complaining about lack of access and change. I think it's really important to emphasize the broader public impact or lack of impact that I think we would be able to see if there was a meaningful open banking framework in place. But to answer your question, Michelle, I think there's key ingredients that we really need to see if we're going to move the dial on open banking in Canada. And, I think we need to see a framework government mandated to some extent that's inclusive to all sizes of businesses and industry participants, including fintech, small businesses, credit unions, banks, consumer advocates, data aggregators. I think right now, if we continue on the path of a market-led initiative, it's going to continue to be very asymmetrical. And, there's going to be a lack of a level playing field to some extent. And I think that, whether we move towards a model in which there's going to be membership fees, it needs to be commensurate to the size of the company and the type of access required. It can't be another, layer in which we're adding barriers, for example. The decision making also needs to prioritize universal standards. It has to be use case agnostic. So these are the things that I think we can learn from other jurisdictions and do it well. We have an opportunity to not recreate the wheel, but also not repeat other places' mistakes.
Yeah, thank you for that. And Abhishek, with your work with EY in the UK, as you mentioned, as well as in Canada, can you shed some light on this question as well?
Yeah, Michelle, I'll pick up on a couple of threads. One which Ben mentioned right at the beginning was the views of whether this is at a glacier pace or this is enough or not enough is a little bit tinted by your position in the ecosystem. And for us, we are more of observers and professional services organization, less of I've got a horse in the race which is going to come out one side of the win versus another. But we got to understand, stepping back, the imperative for open banking is different in Canada. Because the consumer trust in the Canadian banks is extremely, extremely high. Open banking in other parts of the world has been established due to a number of different reasons. Everyone sort of understands the economic scenario and what the ecosystem looked like in the UK when the first conversations started. So for us, what's important in Canada is we need to stay focused on steps needed to foster innovation, which is super important, remove friction between the different institutions and promote investments. And I think in this context, some of the points that Hannah made are extremely sort of relevant. But stepping back, when we talk about market-led, yes, there are a few organizations which are probably doing more than others in terms of the opportunities for the fintechs to partner with them, the opportunities around innovating new business models. One leading bank in Canada a couple of weeks ago announced the creation of a venture fund that would offer additional services free of charge to startups that they are investing in. And the VC community also continues to make investments and accelerated investments in certain business models moving forward. We've got some small steps being made. One example is the FDX API standard, along which a number of industry participants have coalesced and said, look, this is what we want to develop. We think this is the right answer for us, and push forward with that. So whether or not the government's moving the glacial pace is probably a less important question than is there enough innovation happening in the market today, and does the market actually support that? And I think you could debate that part of the answer and say, yes, there is a bunch of different activities happening. We now have banks which are offering banking as a service on more than one occasion. We've got large organizations which have opened up venture capital arms, putting together specific programs for participation of fintechs. These are all important steps. Are they enough? Maybe not. Does it need to be accelerated? Probably it should. Should we be attracting more capital from outside the country to come and invest here and innovate in financial services going forward? Absolutely, we should be doing that. But we are where we are because of a whole bunch of different reasons, and we need to make sure that the path that we have for Canada is appropriate. Because, contrary to how a lot of the tech world operates, is move fast and break things, we don't want to move fast and break things in financial services. That's not going to be good for anyone here.
Yeah, thank you for your thoughts on that and some perspective in regards to the UK. Ben, I know that you've been heavily involved from a Portage perspective in sharing the voice of fintechs. Can we get your thoughts as well?
Sure. I mean, I think glacial pace might be somewhat disrespectful to glaciers. The reality is we are 3 years into this process, and we're not that much further ahead. We still do not know where we're going, and I don't think we've actually answered the question simply, why do we want to do this? As has been mentioned, Brazil, other countries have stood up and initiated and kicked off open banking frameworks in 12 months. The 3 years we've been working at this, the UK started their consultations and launched V1 in that same time frame. So we do need to get this going. And I think the simplest way to do that is for the government to sort of draw a line in this. We need to say, because I think this is what came out of the advisory committee's consultations, was that the committee does see a need for a more government-driven approach. And so start with appointing a lead who will take this work on. They might not have the full legislative heft of the parliament behind them, because this is a whole other process. You need to have the legislation drafted, the regs drafted, but make someone responsible for this and then work with the various stakeholders to get this going. I think the implications, and Abhishek's point about is innovation still happening, is a fair one. I think we should all be incredibly proud of the success of companies like Wealthsimple over the last few months to draw in the amount of capital that they have to this country, and to see the growth in jobs and employment that they're creating, plus other fintechs, is amazing. But the longer we take in doing something here meaningfully, the less likely we are to see another Wealthsimple emerge. And that is not good for this country. So we need to move. We need to take these steps immediately. And I think it's clear what we need to do.
Thank you, Ben. Yeah, and I agree. I look to the UK and see that they had $6 billion in 2019 invested in their fintechs to Canada's 241 million. Though Wealthsimple has helped us in 2021, we still have a big gap on opportunity. and excited that we could hopefully move this forward. But thinking to that point, from a BMO perspective, maybe Hugh, you can share your thoughts.
Yeah, I mean, I think it's like we all understand that this is it's a complex topic. There's a lot of things that need to be addressed. As we've talked about, there's some foundational elements like C11 and others that need to be in place as well. And I think like the biggest thing for me is that I think we're under sometimes this false assumption that a regulatory-based approach is going to somehow be faster and better. I'm not convinced that that's the case. I think that we can actually be faster without having to rely on legislation. I think that we can be more inclusive. Like, so how are we going to include things like credit unions and other entities if they're actually not part of the, the oversight that the Department of Finance has? You need to sort of address those things. Those aren't simple, and those types of complexities in the Canadian context are different than you potentially see in other markets. And again, I would come back and say, like, I think we start to build on the foundation of what have we looked at, what are we agreeing to? We've said we want to see better pace. We want to say it should be efficient. We want to address the fact of how we deal with liability following data, like those kinds of things. Accreditation. There's been a number of topics that we've identified and said these are the places to focus our time and attention, and let's just get on with it and do it then.
Yeah, and I think I'll give the last point over to you, Derek, before we jump to the next question, but just your thoughts on the current pace from a credit union perspective.
Well, I think everybody had some great points there. I don't think I have a whole lot to add other than to agree with some of the things that others have said. Like from a foundational perspective, we need to make sure that there is a base set of, I guess, rules and standards that need to be put in place, and that probably should be coming from the legislative bodies. And once that's in place, though, like, I think that things can accelerate. And I agree with the point that Abhishek made also about the speed is based on the perspective of where you're looking at it from in the industry. A fintech would look at it as like, God, this is taking forever. Whereas, some of the financial institutions will look at it as, okay, well, this needs to take the right amount of time. We need to make sure that we do this right. We need to protect our consumers. We need to, and so on. So there's different perspectives on that for sure. I think that once some base level standards are in place, I think things will start to accelerate, because I think that we can take advantage of learnings from other jurisdictions around the world, and hopefully be able to accelerate as we move forward.
Yeah, and I think to that point, we're going to dig in a little bit to Bill C11 as it was proposed by Senator Baines in November of 2020. It's been with the government since. And really interested because as we look to the UK, they did launch open banking in 2018, but largely because 1 million UK citizens were using screen scraping. And currently in Canada, the last report in 2019 said that we had over 4 million people utilizing screen scraping. Many Canadians are using the core banks, but they're also using a Wealthsimple, a Coho, potentially a Wave to facilitate their daily lives. But not many of them understand the implications of screen scraping and giving over their credentials and what that does to their banking agreement or to their security. And I think Bill C11 does address that through updating, access, mobility, deletion, and many different things that it addresses. But what are your thoughts on the bill generally and its current state, I guess, within the government? And I'll pass it over to you, Ben.
I mean, it's a bit of a moot point to some degree because C11 is not going to be passed. There's, I think, 2 days left in the legislature. And Bill C11 is not a part of Bill C30, which is the Implementation Act. It's a standalone bill. It's received a lot of criticism, particularly from the perspective that it doesn't go far enough in ensuring the privacy of Canadians, that it doesn't do enough to address IP issues. It doesn't go far enough to bring more balance to as folks like Jim Basile call it, the surveillance economy now, or surveillance capitalism. And I think many of those are fair comments. As it relates to data mobility, which is the foundational element to open banking, I don't know that there's been any pushback on that, which I guess in the grand scheme of things, maybe you can take some solace in. But looking forward, Bill C-11 is like the easy part of all of this, right? Like Bill C-11 is a marketplace framework. It says people will have the ability to move their data. It doesn't actually solve anything. Sorry, it then puts each sector in charge of determining what that data mobility right will look like. So this has been the whole point of the work that the open banking secretariat in the Department of Finance has been doing, is like, how do we build the framework? So we have to do all of that. And so we have all of the same issues we still need to address, all the same questions we need to answer. It would be nice if Bill C-11 was going to pass and we knew there was support for it, and you could proceed with that much more confidence. And it fundamentally gives individuals a right to move their data. So it becomes more difficult to push back against that. But regardless, you still need all these other pieces to be addressed and put in place before you can actually bring that right to life. So again, another disappointment as it relates to our ability to really move forward on this file, given now that this foundational piece will be in question, and it's again unclear when we will get to readdressing the new privacy legislation.
Yeah, that's some really great insights on that, Ben. Thank you for sharing. Hugh, did you have something you wanted to add in regards to Bill C-11 from a bank perspective?
Yeah, maybe less around the timing, but I think overall it's actually a pretty thoughtful and balanced piece of draft legislation that I think it acknowledges much of what actually works in Canada. So a principles-based approach, the need to sort of focus around consumer protection, but also how do we think about driving business innovation. I like the focus on consent. I think that's important. I think it addresses the concept of interoperability, but maintains some flexibility to how we manage the circumstances within Canada. And then again, I think overall it's actually reasonably flexible, that it sort of addresses how potential technology evolves or processes or products, and allows some degree of flexibility around that.
Yeah, and with that, in its current state, looking like it's got 2 days left, I know none of us are in government, but Derek, just from a credit union perspective, did you have some thoughts for C-11 in regards to credit unions?
I have to agree with Ben and Hugh on this one. I mean, it moves us in the right direction, right? I think when it will pass, I guess it will come to pass, right, as they say. But when is a matter of when it becomes a priority, right? And at this point, I feel the same way, that it's not going to pass. So. But finding the right balance for the details of what it all means. I mean, we need to make sure that it gets through, and then there is flexibility in what's in Bill C-11 and how it gets addressed from a process perspective and so on in the industry and in other industries, not just ours. But it certainly we'll see how it ends up in its finality. But it is a good foundational piece that moves us in the right direction.
Thank you. And as we move to the next question, when we're looking at the proposed Bill C-30, which Ben mentioned, which is the Bank of Canada to regulate Fintechs, startups in Canada, how will that disrupt the sector or help the sector, Hannah?
Yeah, I think it's hard to say right now how it's going to disrupt the sector. Like, we haven't seen the Bank of Canada in this particular role, and we haven't seen this type of function. So I think the devil is really going to be in the details around making sure accessing these building blocks is both accessible and reasonable. I think really in order to spur competition and innovation, we're going to need to, of course, balance privacy and security and liability, but we need to also make sure that whatever system we create is going to be inclusive of all sizes of businesses, can capture a broad range of industry participants. And, this also includes making sure that, for example, under the RPAA, the Retail Payments Activities Act, the registration for payment providers isn't so onerous and prohibitively expensive that we're really back to square one. The process should be commensurate to size and risk. And so, or that the rules around how client funds are custody, for example, is done in a way that's not going to create more friction around how money moves and some of the strides that we've made in creative sort of thinking in the absence of being able to have access. So, I'm very supportive of the fact that there should be an entity that's able to impose financial penalties and compliance orders of companies that break the rules. People in the industry often equate being registered as a money service business with FINTRAC as being regulated, when really, FINTRAC is a financial crime intelligence gathering agency, doesn't actually supervise the business of providing money services or money transmission. And so, with the exception of in Quebec, that has its own money service business act. But, it's a major gap in the market. And I think this is a key piece to move things forward. But it's really hard to say. It's so early stages, and whether this is going to actually spur the type of result that we want, that we saw in the UK, for example, when they introduced the e-money legislation, which allowed direct access to payment rails for fintechs, and companies like Revolut and TransferWise or Wise now really took that as an opportunity to build some really robust business models, and was able to use the UK as a platform. And mind you, TransferWise was created by a couple Estonians who came to the UK for this opportunity, and Revolut was created by a couple Russians who came to the UK because they saw the regulatory landscape and opportunity as a way to create businesses that they would be able to eventually scale internationally. And Canada is not that place at all right now. In fact, we've seen, major, large international fintechs exit the ecosystem for the, that exact reason. I think open banking actually has an opportunity to fill some of the gaps that we've seen from RPAA, by contemplating things like right access and payment initiation. But, I'm not holding my breath. So.
Yeah, fair. And I'm passing it over to you, Ben, to add a little aspect to that before we jump to the next question, as we're almost running out of time and there's so much more to talk about.
I'll try and be brief. So Bill, just to be clear, Bill C-30 is the Implementation Act, the Budget Implementation Act. In the Budget Implementation Act, which I think is what this question is referring to, your question, Michelle, is the RPAA, and the bank being given supervisory responsibility for paytechs coming into the system. There's never been a segment of the population that's been as eager to be regulated as fintechs or paytechs. The challenge is what that regulation actually enables them to do. So the primary issue, so our RPAA as it exists, I think generally, makes sense. The bank having a role in creating the registry, overseeing participants, expecting them to be operating at the highest level of sort of technical and professional capabilities, all make sense. And the foundational or guiding principle for the RPAA is actually to build trust within the consumer Canadians to use these services. Fair point. Regulation should help to do that, but regulation without access, which is actually what the RPAA provides today, like access to the infrastructure, is self-defeating. To say you want these organizations to be treated the same or have regulatory oversight like the established financial institutions do is totally fair. But you should give those organizations a level playing field to compete on, or a reasonably level playing field, so they can actually get access to some of these pieces of infrastructure that will let them deliver their products and services. Otherwise, you're saying this group doesn't have that capability to do these sorts of things, to use this infrastructure properly. And that is not fair. And so while RPAA is good, the key ingredient to all of this is amendments to the CP Act, the Canada Payments Act, which need to open up membership to allow Paytechs in or third parties in who then can access infrastructure. That was not included in Bill C-30. We're told, I think, that it should be, or the plan is to move that forward. But again, given the performance of the government on some of these issues, I think it just remains another question mark in this whole process, which again makes it challenging for fintechs to continue to grow and mature and expand and see others come into the ecosystem.
Yeah, thanks for the added insights to Bill C-30. It does move us forward, but still leaves some opportunity that needs to be added to give us that level playing field. But if we're continuing down this market-led approach towards open banking, how might the impact be on the innovation space? I know, Abhishek, you've been talking about that quite a bit from that perspective. So what's your thoughts in regards to market-led approach?
Well, I think a lot of it is going to be in small series of incremental steps, the way Ben described it. I think we need to take what we're getting now and strive to build and improve upon it. If we're getting to a point where we're starting to create trust in the ecosystem through the registration process of payment service providers, step one. Step two, maybe direct access to payment rails, as Ben was suggesting. Absolutely, it's an important part of it. I think on the other side of the argument, what we need to keep in mind is the same amount of safeguards, the risk management processes, the ATF, AML type overlays that the current CPA direct members would have. We need to make sure that even in that future ecosystem where fintechs and paytechs of all sizes have more direct access, we've got that safety, we've got that security, we've got that risk management and mitigation pieces in place. Because yes, I sort of go back, innovation is great and we need to all pursue innovation because eventually it's going to lead to more efficient business models, more effective controls, and so on. We can't have it at the expense of a systemic risk to our payments ecosystem or systemic risk to our financial services ecosystem. So I think that's where the balance is, and that's what we're finding it really hard collectively to strike the right balance and get consensus on that. And you could hear the arguments coming in from the VC community, the fintech community, the paytech community, the smaller banks and the larger banks who are all stakeholders in this discussion, and everyone sort of brings a different perspective. We're not going to break things as we innovate, but could we be a little bit more prudent and a little bit faster, be a little bit more responsive to where the market trends are? I think absolutely the answer is yes.
Yeah, and as we're unfortunately running out of time, I do want to go to the last question just to ask each one of you to share your thoughts on what the right ingredients are to get Canada to move to an open banking ecosystem that will help Canadian consumers as well as SMEs and banks, credit unions, fintechs, all alike, as not a zero-sum game. So how can we get there first? Hugh, I'll pass it over to you.
Yeah, I mean, my perspective is that I actually think a market-led approach is probably the fastest way to get from point A to point B. That less complexity, less cost. You address the federal, provincial, jurisdictional issues. You start to build on the foundation and actually get things built. And the reality is, this is sort of, I think, how at least the banking industry has been operating. We're working on these agreements every day. We're negotiating these things, and I think that if we were to actually collectively come together and solve some of the bigger things, what does accreditation look like? How do you manage liability? That would be the unlock to actually make this thing happen. And again, we don't have to sort of sit back and wait for some guidance to make that happen.
Thank you for that. Derek, over to you from a credit union perspective.
I would have to agree with you on that. I think a market-led approach will be faster. I think it's important to push forth to get the standards in place, right? To get the C11 in whatever shape or form it will be finalized in, to get that in place. But I think that if it's led by the market, it'll actually get done. It'll get done quicker. What we do have to be careful of and conscious of is to be prudent, right? We do have to be prudent. Our consumers have high trust in our financial institutions in Canada, and it's important to keep that trust going forward.
Thank you. I'll pass it over to you, Ben.
I mean, I think the steps are pretty clear. You need to appoint a leader, set up an implementation entity, give them an objective, and to help and the tools to put the framework in place, and then launch it. It's what other countries have done in far less time than we've used consulting on how we should do this. So there's no magic to this. It's very straightforward. We just need the direction to do it.
Thank you. Abershank.
Look, I agree with Ben quite a bit, but we don't believe that open banking is something that you have or you don't have. It's not that black and white. We think it's a set of conditions that are applicable to a market, including legal and regulatory frameworks that we've had a long discussion on, and the investment climate, which is a consequence of both private and public sector action. It's about consumers trusting businesses and being open to new value propositions, as well as changing their behavior to take advantage of new offerings. We think open banking has less to do with one segment prevailing over the other segment, rather more to do with healthy competition in the market. And as we know, competition creates innovation, and innovation leads to better outcomes for consumers. We're all here consumers of financial services products. I think at the end, it's about growing the pie for the overall market and how that pie is divided between all the players.
Great point. Thank you, Abershank. And over to you, Hannah.
Yeah, I think the piece on competition that Abhishek mentioned is extremely important. And I think that, I think we've already seen what a market-led approach looks like. We're in it right now in the absence of anything government mandated. And I think the one piece that, at least from the fintech perspective, I've seen that it fails to do is add that level playing field, that allows like meaningful competition spurred from other players in the market other than the incumbents. And so it's like going to your competitors and asking for access, right? It's going to impact your economics. It's going to impact your user experience. It's going to impact a lot of aspects, of that we see in other markets that we don't have in Canada, just due to the size and scale of what we look like and sort of our landscape. So I think that, somewhere along the spectrum of having pieces that are mandated and having it more inclusive to different sizes of businesses, industry participants, again, making sure that the decision making is prioritizing like universal standards, it's use case agnostic. I think that's really hard to do if it's going to be market led.
Thank you so much. And thank you for everyone joining us today. It was such a great discussion, really digging into some of the challenges, as well as I just hope that Canada can move forward to take advantage of the aspects of open banking that can help the ecosystem, Canadians, as well as SMEs. So thank you for your time and answering all the questions. Time went quickly and we didn't get to all of them, but I look forward to going to our live Q&A to hear from our audience. Thank you for joining us and being a part of this panel today. We're really excited to move to live Q&A. And our first question that we want to get to is, given that Canada is late to the game when it comes to open banking, do you believe that this is an opportunity? In other words, looking to other markets from a fintech and banking perspective, do you believe that there are roadmaps that we can look to from a market-led approach as well as a regulatory approach? And I'm going to start with that, Ben.
I mean, I think we've always billed ourselves as a fast follower with that idea in mind that you can learn and understand what's going on in the market. I think, we've lost status as a fast follower, and we're not even a follower right now. So I think there are multiple implications to that. And I think the biggest ones are, consumers are missing out on some of the unique products and services that are now being made available in other countries. I think fintechs are missing out on opportunities to create some of those products and services. And I think our banking sector is missing out on understanding what it means to operate in a truly open banking environment, which I think has downstream implications that we're not yet understanding. So in theory, yes, but you actually have to move. And as we know, and as we talked about in the last hour, we are not moving right now.
Yeah, thanks for those insights. And Abhishek, having that UK lens as well, can you share some of your thoughts?
We are picking up some innovative product sets, offerings, and introducing them into the Canadian market. Are they happening at a pace where we'd be called, the innovators across the world and the best in the business? Maybe not, arguably not. But if you look at some of the examples that we talked about, we've got banks who are offering platform as a service to other fintechs who want to bring innovative products in the market. It's happening. Do we have collaboration between fintechs and banks to address larger market segments? It's happening. Is it happening at a huge scale? Probably not, but it is there. So yes, there are learnings, and yes, those learnings are being brought in. Could we do with better pace? Absolutely.
Thank you. Can you share from a BMO perspective, what is your preferred approach and any lessons that you look to from other regions?
We probably are in a somewhat advantaged position because we can look at what's happened in the rest of the world. And in my mind, I think there's an opportunity for us to be faster, for us to avoid some of the stumbling blocks that we've seen in other markets. And I think there's sort of that opportunity to be quick to market, to have more flexibility, to be more efficient, get rid of some of the complexity, et cetera. And when I look at it, I mean, certainly our perspective would be the market-based approach is faster. If we wait for legislation, it's going to be years and years and years before we actually get on this. And so the fastest way for us to actually start to implement something is to start to work together and actually make that happen. It also solves elegantly the sort of federal, provincial, jurisdictional challenges. How do you get sort of credit unions to participate on the same basis? I think it's happy or a good way to do it. And then I also feel like there's sort of just a degree of common ground, like in particular coming out of the consultation. So what do we need to do to start to frame up what accreditation looks like and how that works? How do you address things like liability that have been some of the stumbling blocks? And so I think there's a lot of opportunity, and it's important that, I think people often point to the UK and say, well, this is a great example of how it can be, and I would say that that's not a perfect model, right? Like you've seen, it's costly, it's complex. There's some uncertainties around what it's going to look like going forward. Quite frankly, customer switching has been flat to down over the last number of years as well. Penetration is pretty good, but it's still relatively low. So it's not like I would look to that and say that's the answer that solves everything.
Yeah, thanks for that framing. And as we look to the credit unions, because we have such a great group of credit unions across the country, Derek, what are your thoughts of moving forward to protect that ecosystem and help it grow?
Well, we certainly need to make sure that we're always thinking in the interests of our membership, our consumers, and I think that being late to the party is not always a bad thing, but we can't be too late to the party or the party will be over, and we won't be able to catch up. So as to what Abhishek said, I think that there are some things happening, just not enough and not quick enough. Market-led approach is certainly the way that we need to go as an industry here in Canada to move this forward. It certainly is easier to adopt something that's already achieved some level of maturity in other places, but like you said, there's no perfect model, and if we're seeking to find the perfect model, we're never going to get there either. So let's keep that in mind, and let's move this forward as quickly as we can.
Yeah, great comment, Derek. And knowing that we only have 5 minutes left, I do want to close the session with asking this really important question. If open banking, consumer-directed finance is delayed any further, what do you foresee are going to be the challenges for Canadians? And I'll start again with you, Ben.
I think I could sort of say the motherhood and apple pie statements around like a less competitive, less innovative financial services industry, but that messaging hasn't resonated to any degree. And so I think if I sort of think about different sectors, when it comes to the fintech sector, which is obviously the sector we think quite a bit about, as I said in my opening remarks, you just bring additional uncertainty into play. And uncertainty for any business isn't great. Uncertainty for a fintech that may only have 24 months to figure out what their business and product will be, it becomes really difficult to run your organization. And that's a position we're putting many fintechs in this country in right now. And I think the implication of that is that it may become harder to invest in Canadian fintechs who are playing in this space, who are thinking about how do we leverage data, how do we build products and services for customers. I think it could become harder to fund and invest in this sector. And I think the implications of that for Canada as a whole mean less jobs and less investment. And those are two really important things that I think we all have an interest in. The last 15 months have shown the growth and the potential for fintech in this country. And companies like Wealthsimple and Mogo and Coho and others are hiring like crazy. They're bringing in significant investment into this country. And the longer it takes us to, whether we do this one way or the other, the longer it takes us to define the guardrails, I think the harder it gets for us to continue to foster this ecosystem and build the next generation of Wealthsimples.
We have 3 minutes. I do want to pass it to Hugh from a BMO perspective, looking to the future. Any more delays? What do you see that doing to Canadian consumers or SMEs?
Yeah, I would agree with Ben that time is of the essence. Let's get going. And so I would say two broad things. One is it's a little bit like waiting for the teacher to tell you what to do, and I don't think we need to do that. That we can actually get on with a bunch of things right now, as I mentioned before, accreditation, thinking about liability. Like we know collectively what we need to do to solve that. So let's get a move on and actually make that stuff happen. Those are things we could start to pick up the tools and do right away. And then the second one, I think, is just a perspective that says it is happening. Like if I look at my world in partnerships, I'm probably negotiating 3 to 5 times more partnerships than I've done in prior years that are all related to data access, that are much more, quite frankly, than kind of a traditional retail thing, that are creating great solutions. So stuff is happening. It's not like it's dead in the water.
But Hugh, think of how much extra time you have if we had a standard multilateral data sharing, structure in place versus all of these bilaterals. Think about what you'd be able to do with all that time.
I've got a lot of free time. That's right. That's a good point, Ben. I forgot about that.
And then for the credit unions, in that same respect, Derek, what are your final thoughts?
I don't think I have a whole lot to add to what Ben and Hugh have said, but in the end, I mean, like I've said all along, I mean, the more solutions, the more consumer flexibility that's going to be out there for them, and they'll eventually get more and more mature solutions, right? But we have to make sure that we get this moving as quickly as possible. Otherwise, there will be disinterest from some potentially really good fintechs that could come into our market. There will be a lot less of that activity going on if this takes too long. So, like I said, in the end, the consumers will be the biggest beneficiaries, as they will be given the ability to choose new solutions, new ways of doing business, new ways of looking at their data, being able to move their data around, between different types of fintechs that have different offerings that they may have, they may see value in to use. So, you know, we need to move this as quickly as possible as an industry to not, I'll say, miss the party completely.
Yeah, I appreciate that. And EY, thank you for sponsoring today's panel. I give the last time over to you, Abhishek, to close off your thoughts.
Thank you, Michelle. And we're really pleased to support this discussion. It was a very lively discussion. What I'd say on this last point, I don't want to repeat the points around innovation, around investment. All those things are true. But we should always remember, at the end of the day, our purpose is we're serving Canadians. We're trying to create a better environment for businesses, a better environment for consumers, and to give more opportunities. We want a world in which when people come to Canada, they come in and say, wow, this is, you know, fantastic. The infrastructure is amazing. The financial services are, you know, top notch, best in the world. That's the kind of reputation we want to build. That's the kind of Canada that we want to build. So, you know, the sooner we get on the bandwagon, whether it's a, you know, market-led approach or there's market-led supported by government initiatives or regulatory initiatives, whatever that is, we must not lose sight of the goal, which is ultimately serving Canadians and making Canada a better place in the world.
Very well said. Thank you for joining us for this really important discussion. I have truly enjoyed it, and thank you for all of your insights and for joining us. Thank you, Open Banking Expo and EY, and we look forward to the next one.
Thank you so much to our moderator, Michelle, and all our speakers, Abhishek, Ben, Hannah, Derek, and Hugh, for that lively panel. Now, on to the part of the meetup that involves you, the audience. Let me our very first audience collision, which is your chance to chat over the topic to you most. To take part in the collision, simply add the session to your schedule via the virtual homepage. It really is that simple. And if you're unable to attend the collision, then we hope you enjoyed the first meetup. Thank you to everyone for attending. All of the content from today's meetup is available via the on-demand section website. And do get in touch if you'd like to be considered for speaking opportunities at the next event. It's been a pleasure to host this first quarterly meetup to our Canadian community, and our thanks again to EY as our lead partner. Here's another event of diaries. On the 14th of July, we'll be announcing the winners of the inaugural Open Banking Expo Awards, and you can tune in live. All details are available at openbankingexpo.com. If you're shortlisted, good luck. For those joining the audience collision, I'll see you in the virtual meeting room shortly. Goodbye for now.